In this video, I want to continue our conversation about balance sheets, and I want to specifically talk about the thing that I think separates mediocre accounting from good accounting. And this is an issue that I have seen in the smallest startups that we work with. And I've also seen it in multi billion-dollar companies that I have worked in my career. So what are we talking about? We're talking about reconciliation and substantiation. These are two very different things. What reconciliation is it's making sure that this thing matches another thing. That's reconciliation. Substantiation is saying that this thing matches another thing and it belongs here. Reconciliation is making sure that all of the transactions that belong in the books are in the books, and all of the transactions that don't belong in the books aren't in the books, and the transactions that are in the books match some sort of a source document. A great example would be a bank statement. A bank statement has a balance at the end of the month. You're going to reconcile to that bank statement balance, which means that the balance that is on your balance sheet matches the balance that is on the bank statement. And then all of the transactions that comprise that monthly bank statement are in the books. They're running through the balance sheet. Substantiation takes reconciliation to a whole other level. As I mentioned, it's making sure that the thing that is on the balance sheet not only ties to some sort of a source document, but it belongs there. Just because it ties to a source document does not mean that the thing actually belongs there. So here are three key questions that you should be asking every single month about every account and every balance that is on your balance sheet. Number one, why is this here? How did it get here? Why is it here? Does it actually belong here? Number two, how will this clear? In other words, how is this thing going to actually get off of the balance sheet? Most commonly, when things are going to clear from the balance sheet, they are going to go through the P&L. And what that means is that they are going to have some sort of an impact on the profitability of your business, the net income of your business. So you want to understand very clearly, this thing is on the balance sheet. How is this thing going to get itself off the balance sheet? And then our third question is, when will this clear? It's not enough to know that the thing actually will clear, but we need to know when it's going to clear and when it's expected to clear. So if we know that this thing belongs here, we know how it got there, we know when it's going to clear, we know that it actually will clear and how it's going to clear. Now we have substantiated that balance. So that balance at least belongs there for this period of time in this moment. Hopefully that helps. And I hope that that helps you to understand what good accounting looks like versus what mediocre accounting looks like, and why it is so important to not just reconcile the accounts on your balance sheet, but to actually substantiate them. See you in the next video.